risk of deeper fallout from the second biggest bank failure in US history. Joining us live now, the CEO of Canvas Digital, David Lavecky. David, thanks for your time this morning. There'll be a lot of people who are wondering just what Silicon Valley Bank is this morning, particularly here in Australia. So what is it and how big is it?
So Silicon Valley Bank is a technology-focused bank in Silicon Valley that was providing banking services to the majority of tech startups. And what's been observed late last week and continuing over into the weekend was that depositors were withdrawing their funds very quickly. And what that led to is the bank having to sell their equity at a loss, which further exacerbated withdrawals. And we saw spectacularly leading into Friday that all funds were withdrawn and the regulators stepped in and took control of the bank, declaring it insolvent.
So why were those funds being withdrawn at a rapid rate?
So it would have started given that they had been providing services to tech companies that are struggling to raise venture capital in this environment. They would have been withdrawing. But then leading into the week, comments that were made by the bank and the fact that they had to sell securities in order to meet withdrawal requests exacerbated the situation, leading to a bank run. So they had $42 billion worth of withdrawals in just one day.
So who's stuffed up there? I mean, was that a panic? Is that a panic sell?
Well, the situation did feed on itself. It was a classic bank run situation, but really part of what happened, the subtlety of it was the mismatch in the bonds that they were holding. When the bank bought bonds in order to maintain its capital adequacy, there would have been long-dated bonds, and if they have to be sold prior to maturity, they have to be sold at a loss, and that's exactly what happened.
Either way, it's a big deal. The biggest bank collapse since the global financial crisis. How many Australian startups would have had their money in that bank, David?
There would be more than a few, and it was seen as a sign, as a badge of honour to actually hold a bank account at Silicon Valley Bank, both for your startup and actually personally, where you might have debt facilities, mortgages, and all of those funds are locked up. You're essentially guaranteed $250,000 US by the government, but anything beyond that remains to be seen what will be recoverable.
So does that mean if there was an Australian startup who had their money in the bank and didn't get it out, that they could go under here?
Well, they need their deposits for capital adequacy, to pay payroll, to pay suppliers, to run their business. And so those funds are uncertain. So yes, there's definitely impact, and they have to source capital from elsewhere. So the banks will open on Monday, and that will be really telling about what happens going forward for these startups.
And how difficult would that be to source capital from elsewhere?
Well, it depends what you can get and where you can get it from. If you can put it in personally, or if you can get it from your venture capitals, but it's a very tricky situation. Okay,
well, just more broadly, what does this mean for the future of investing in startups and for startups in general with the closure of this bank?
I think for startups, there could be a very serious situation. If you think about a whole number of innovative companies, of technology-focused companies that are building the next big things, like ourselves, that they may have funds tied up, locked. They can't make payroll. They can't do what they need to do. That's a very serious situation for a very fragile ecosystem that's already having trouble, given that the decline in stock prices and the challenges in raising VC in this environment.
I tell you what, doesn't that show how fragile the banking sector can be, David? If all of a sudden there's a rapid rate of withdrawals and a bank goes under, how much confidence can you have in any bank related to tech startups in the future?
If you can't trust your money in your bank, where can you trust it?
So where does it go?
So it goes into a diversified allocation. And so short-dated treasuries, where there isn't such a mismatch of saying, well, so long as the bond is held to maturity or securities are held to maturity, that's okay. But if they're having to be sold prior to maturity in order to fulfill redemption requests or working capital requirements, that's where situations can arise. But I think overall the banking system is resilient. It's just a matter of diversification and risk management.
Well, all right, a lot of people waking up this morning or over the weekend not really knowing what Silicon Valley Bank was. Well, they do now. Appreciate that, David. Thanks for explaining. We'll talk to you again soon. We're coming up, the PM lands in San Diego ahead of a major submarine announcement.